Hey, what's up, guys? Houston here. Look, if you've ever thought about getting a personal loan from American Express, all right, here's the deal. Yes, it's true that they will not ever do a hard pull on your personal credit, okay? The thing about it that most people do not understand when it comes to American Express and their personal loans, all right? I'm going to break this down for you. One, is that you have to have at least a 660 credit score. Now, here's the thing about it that some people just don't get as well. If you never had a credit card with them, okay, you cannot get their personal loan. Okay, so you will not qualify for their personal loan if you've never had a credit card with them. Now, granted, again, they don't do a hard pull on the credit. Now, how they verify in terms of your situation is that because they have internal data points that they look at, right? So when they're looking to give you a credit limit increase and stuff, they do soft pulls and stuff like that. So you have to have a certain amount of time with them in order to qualify for their personal loan as well. All right. Now, here's some other things that people don't get. American Express, they have 5 cards that are unsecured, okay? Unsecured revolving cards. And I know some of you are, well, why are you talking about that? Well, it's going to make sense in a minute. You can get all 5 of those cards that are revolving unsecured cards. However, if you get their personal loan or their business loan, okay, this will subtract from those 5 cards. You no longer will be able to qualify for 5 cards. So if you get the personal loan, then you'll only be able to qualify for 4 of their revolving unsecured cards. Now, when it comes with the charge cards, you can have multiples of those. That's okay. But when you get that personal loan or business loan, or let's say you get both of them, then you only going to get 3 of their unsecured credit cards that are revolving, all right? Not the charge cards, the revolving cards, all right? So that's one of the bigger things that people are confused about, because most people, when they're joining American Express, they're trying to go for the points and stuff like that. Now, here's my strategy, because most of the time with those revolving cards, you cannot liquidate them. Well, you could, but you have to be very careful because it'll throw up a red flag. And if it throws up a red flag, what that means is that you would have to do a financial review. Okay, so say that you liquidate that card through Melio or plastic, or even if you use the card, okay, and you max out the card and then pay it off, okay, if you do that multiple times within a short time period, what they would do a financial review on you, okay? And so this is something that people are not aware. So what that financial review, what that means is that you will have to submit pay stubs, you will have to submit taxes, and they will not open those cards up until you do that, right? So that's the reason you have to be careful with that. Now, here's the thing that I would tell you. If you are considering the American Express personal loan and you already have American Express credit card, okay, whether it's a revolving card or a charge card, all right, and so you met that 6-month time period and they invite you for that personal loan, what I would do, I would probably go for their American Express Blue Cash cards first, okay? And the reason is because with the Blue Cash cards, you're not paying any interest on any purchases or balance transfers anywhere from 12 months to 15 months. The Blue Cash everyday card gives you 15 months of 0% interest on purchases and balance transfer. The regular Blue Cash gives you 12 months, right? So you're not paying any interest versus when you get that loan. Now, their loans go from 3,500 up to 50,000. However, the thing about it, like I said, if I can avoid getting these here loans versus getting access to the credit cards, I would tell you to go for the credit card with the 0% interest. All right. Now, that being said, like I said, needing at least a 660 credit score to even qualify for that loan. So if you're going to need a 660 credit score and you needing a loan, so instead of going to American Express, then I would tell you to probably go over to PenFed, right? And so with PenFed, all you need is a 620 credit score, and they pull Experian, FICO 9, okay? And so what that means to you, that's a big leverage point, because by them using Experian FICO 9, that means that they're going to accept you adding the rental payments, you adding the subscriptions onto the file, you adding the utilities, you adding authorized users, so to help build up your credit file. All right, so that's the reason why I would tell you to go over to PenFed. If not PenFed, you can go over to Connecta. Okay, Connecta Credit Union. They go up to $100,000 and they use Experian FICO 9 as well. Okay, so being able, if you got a 660 credit score and you're willing to show proof of income and stuff like that, the reason PenFed is good because you don't have to show proof of income. You just pay $5 to open up the savings account. And then once the account is open, I would also tell you open up the checking account as well. But at the same time, even with PenFed, if you got a 660, then I would go for their gold credit card before I go for their personal loan, because the gold credit card is 0% interest for 15 months. So again, I would get the credit cards for these institutions before I actually go for the loan, so that way I'm not paying any interest on the loans. All right. So going back to Connecta. Now, again, with Connecta, they offer up to $100,000 personal loan. However, they also offer a line of credit up to $100,000. So for me, like I've been telling people, if they're going to give me a line of credit versus the personal loan, I'll take the line of credit, because once you take the line of credit, you don't have to apply for it anymore, and you always have it. It's just like a revolving credit card, right? However, if you pay that loan back, then when that loan's paid back and you need that loan again, you have to reapply for it. But with that line of credit, you don't have to do that. All right, so that's the reason why I would choose any of those if I can't get the American Express personal loan. Now, here's something else. You can use the State Department Federal Credit Union as well. They got loans and lines of credit up to $100,000 as well. Now, the reason I like them is because once you get approved for that loan of line of credit, you don't have to make a payment for 90 days. So that's the reason why I would probably leverage them and get in there. Especially, like I said, you got a 660, there isn't too many places. Now, here's the thing about it. If you're talking about DTI, high debt DTI, debt to income ratio, that means that you have an over 55-60%. Okay, PenFed is 60%. Some of the other credit unions, they won't work with you if you're over 55%. But if you're over that 60% threshold, then that's where you would use the alternative lenders like Universal Credit that works with 75% debt to income ratio. However, you do have to have a credit file at least 2 years old with at least 2 accounts on the file. Okay, so you have Achieve as well. They go up to 50,000, but they work with a 620 credit score as well. Now, they're not in all 50 states, but at the same time, the DTI is 70%. So just choosing which lender, like I said, with American Express, they're more favorable, again, because they're never going to do a hard pull on the credit. But at the same time, because they already know what's going on with your file, they're not worried about the debt to income ratio because they got all the data they need on you as well. All right. So I hope this video helped you. If you have any other questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.